Welcome back to Tax to You, the Practical Tax channel, where we answer all of your tax-related questions. Today, I'm going to be covering who needs to complete a self-assessment tax return. To do this, I'm going to cover the 5 most common reasons to register for self-assessment, what you'll need to do if you have one of these types of income, and then a question that comes up a lot: how do you determine whether you are self-employed or employed? Before we get into it though, don't forget to like the video and subscribe to the channel for more helpful tax content. Submit your questions in the comments below and we will ensure to get them answered either in the form of a reply or possibly a dedicated video just like this one. Check out our website using the link below, where you'll find an easy to use UTR registration service for those of you who need to get registered for self-assessment, because although our aim is always to educate our clients as much as possible and share this information, we understand tax can be confusing, stressful, and time consuming, and that's where we can step in and help. Check out the thousands of reviews on Trustpilot from clients who trusted us to do just that. So here are the 5 most common reasons to complete a self-assessment tax return. Number 1 is self-employment. If you're working for yourself and your total turnover from all self-employments is more than £1,000, then you need to register for self-assessment and report that income to HMRC via a tax return. Self-employment in the UK peaked in 2020 at just over 5 million people, with lots of people looking for alternative incomes during the pandemic. This has now settled down with more normal working habits returning, but still stands at around 4.25 million as at July 2023. Number 2, if you are a partner in a partnership. Now, a partnership is just 2 or more self-employed individuals working together under an agreement known as a partnership agreement, which determines all the important details such as who is entitled to what share of the profits. Anyone who is a partner in a partnership, irrelevant of how much income they earn from that partnership, must complete a self-assessment tax return. You're taxed in the same way as a self-employed individual, but only on your share of the profits. In 2022, there were thought to be around 350,000 ordinary partnerships in the UK. Number 3 is where you have taxable income exceeding £100,000. The reason for this is because it's at that £100,000 threshold. That's where your personal allowance starts being taken away by HMRC. They believe that if you earn over £100,000, you don't need that tax-free allowance. So for every £2 over that £100,000 that you earn, £1 of your allowance gets withdrawn, which means that by the time you get to £125,140, your tax-free allowance is gone. It actually means that anyone earning between £100,000 and £125,000 will be paying an effective income tax rate of 60%. Automated tax systems like PAYE aren't advanced enough to account for this additional complication, which means anyone with taxable income exceeding £100,000 will need to complete the self-assessment tax return, irrelevant of the type of income. In a business survey by Centrip, around 1.2 million people claim to be earning over 6 figures in the UK. And number 4 is where you need to pay the high income child benefit tax charge. This one applies where you earn over £50,000 and either you or your partner are claiming child benefit. Again, the benefit you received starts to get taken back. For every £100 over the £50,000 threshold, they'll take back 1% of your child benefit, meaning the benefit has been completely withdrawn for anyone earning over £60,000. In the case that both are earning over £50,000, the charge is always paid by the higher earner, and the only way to report and pay the charge is via a self-assessment tax return. In the 2019-2020 tax year, 373,000 people paid the high income child benefit tax charge. And number 5 is where you have rental income to report. If you have income from property, then it may also need to be declared on a self-assessment tax return. The rules are slightly more flexible for this type of income, as the first £1,000 is tax-free and therefore wouldn't need reporting at all. Between £1,000 and £2,500 could be reported via phone, but anything exceeding this would have to be declared on the tax return. In the 2021 tax year, there were 2.74 million landlords who declared income from rental properties. Now, what do you actually need to do if you have one or more of these types of income? If you haven't already, then you'll need to get yourself registered for self-assessment with HMRC. Once you've done this, you'll be required to complete an annual self-assessment tax return, which will cover the period from the 6th of April through to the 5th of April the following year. That's known as a tax year. You'll then have until the 31st of January to get that return submitted and any tax liability owing paid. You'll need to register by the 5th of October following the tax year that income or that gain arose in order to ensure that there's enough time to get you set up and for HMRC to issue you with a UTR number, or unique taxpayer reference, which is HMRC's way of identifying you once registered. You'll need this to submit returns and for any communications that you might have with HMRC. If you're looking for a quick way to get yourself registered and obtain the UTR number, then I'm going to link down below to our online registration service. Just register your email address and fill out the form. You can see here you'll only need to provide basic details such as name, address, date of birth and national insurance number. One of our agents will then complete the registration on your behalf, ensuring everything has been declared correctly. Your UTR number will usually then be issued within 2 weeks. And finally, how to determine if you are self-employed or employed. Now, we already know that self-employment is one of the most common reasons to register for self-assessment, but one question we get asked a lot is, how do I know if I am self-employed? Most people who work will either be employed or self-employed, but sometimes it won't be clear which of those categories you fall into. In fact, it can be a little bit of a grey area. So it's important to know some of the key indicators for each status. If you are employed, your employer is likely to determine the hours that you work, provide the tools and equipment you need to do your job, demand that it is you yourself who actually undertakes the work, and you would actually be obliged to complete that work in line with your contract. This is very different from someone who is self-employed, who will usually choose their own hours of work, be responsible for providing the tools and the equipment that are needed to do the job at hand. They'll be able to subcontract their work to someone else if needed, and they can turn down work that is offered to them. For anyone who receives a regular payslip from their employer, a PAYE reference number would be a clear indicator that you are being paid through PAYE and have employee status. Those who work in the construction industry will usually receive a regular payment and deduction statement, which again is a clear indicator that you are actually self-employed. Now, after viewing this video, you should know the 5 most common reasons to register for self-assessment, what you need to do if you are in receipt of one of these income types, and also how to determine if you are self-employed or employed. Don't forget, at Tax2You, we provide an easy-to-use self-assessment service and would be happy to help whatever your situation. Just reach out to us at info@tax2you.co.uk or follow the link below. That is all for today. Don't forget to check us out at tax2you.co.uk and subscribe to the channel for more helpful tax content. Thank you for watching. See you next time.